Welcome to SF Live, episode 276. My name is Marc Friedrich from the Friedrich and Partner Vermögenssicherung in Germany, and I'm happy to be here.
Fantastic, Mark. Thank you so much. Best intro we've had on the program so far. I really appreciate it. Thank you so much for joining us. It's a great pleasure, Mark. We've met a couple times over recent months, so I'm really excited to have you here on the program. You were a keynote speaker at our Deutsche Gold Messe just recently in Frankfurt. Unfortunately, we didn't have the time to sit down in Frankfurt. It's been quite chaotic. It's been busy, so I really appreciate you taking the time now. And for our German listeners, für unsere deutschen Zuhörer, ganz kurz noch, YouTube bietet das Feature an, dass man sich deutsche Untertitel hinzuschalten kann, weil wir das Interview auf Englisch führen werden. Einfach unten auf CC klicken und dann gibt es dieses kleine Rad noch. Da kann man die Sprache der Untertitel noch auswählen. Da können Sie gerne auf Deutsch klicken und das sollte eigentlich ganz gut funktionieren. Und damit können Sie dem Gespräch locker folgen. That's it.
Und auch die Geschwindigkeit kann man einstellen. Also bei mir immer ein bisschen langsamer, weil ich sehr schnell rede.
Sehr guter Punkt. Das passiert mir auch oft. Genau. Thank you so much. Let's switch back to English. Mark, as I said before, yes. Thank you so much for joining us. You're like a bestseller author in Germany. You've had 5-6 best-selling books. I think the most popular business book or economics book in 2021. The biggest chance of all time, I think, is the title in English. Die größte Chance aller Zeiten.
The biggest opportunity of all times, exactly. Die größte Chance aller Zeiten was the most successful economics book in Germany last year.
Fantastic. And we're going to focus a bit more on commodities this time. SF Live is a commodities channel. We focus a lot on junior mining stocks, but also like the broader commodities spectrum. And just diving right in, like let's start with gold, to be quite honest. Like, this is one of my favorite commodities. It's the easiest, the most talked about as well. We're trading at about $1,830 US right now, and general markets are off 30%. The S&P is down 30%. Major tech stocks are down 50-60%. Do you think gold is doing its job right now?
Actually, yes. If you look at different currencies, you see gold is quite strong. For example, in Japan, we see all-time high. The same in euro. It's pretty good, actually, against the stocks, and in the Turkish lira, of course, as well. In US dollar, not so strong, because the dollar is very, very strong, because everybody is looking for security, for a safe haven, and is investing into the safe haven US dollar, because they're hiking the rates again, the Fed. So people look for safety in the US dollar or in treasuries in the US. That's why gold had in dollar a bad time in the last couple of months.
I think we're actually doing great. Like 1830, I think personally I'm quite happy with 1830. Looking at what is going on in the world, and like coming from the miner perspective as well, the miners are making a ton of money.
Yes, definitely. They are cash flow monsters right now. But anyhow, if I would wake you up after 2 years of coma and would say, hey, Kai, listen, we have war in Europe. We have inflation about 8.5%, 8.6% even, and 8.1% in the Eurozone. And we see a recession on the horizon. Everything goes crazy. You would definitely say, oh, great, gold must be at $3,000 or $4,000. But it isn't. So you see, there's still a lot of room for going up, but gold is manipulated. We all know it, and that's why gold is doing okay. Not great, but okay.
Yeah, it's absolutely hanging in there. And you mentioned it as well in other currencies like the euro or Japanese yen, and even I wasn't aware of it. Gold is outperforming like crazy. We're trading at about 1730, I think, on the euro basis. That's it's close to an all-time high looking at it. It's why is the market in general not really aware of that? Like, we're still like all doom and gloom, but we're not talking about the positive aspect of that as well. Like, gold as a hedge is actually working.
I think everybody is expecting a recession, and everybody knows if a recession hits the market, gold will suffer as well. And everybody is looking actually down for gold for 15 or 1600. That's why people are scared investing in the boring investment of gold, for example. Also in the media, gold is not like that topic. And right now, everybody's talking about Bitcoin or commodities, oil, gas, or whatever, or something else. So anyhow, gold is not that popular right now because it's doing okay. It's not doing great. If it would outperform by a lot, then I think the media would cover it even more, and people would be see it, would acknowledge it, and would perhaps invest into gold. But right now, it's a lot of fear in the market, recession, hiking rates, the central banks. So I think the time will come, but it's not now. It's in the near future, I guess.
What is near future for you, Mark?
I think gold will do very good in this year. So we will see gold, I think, doing positive returns like 5 or 10% plus against all other assets. So it will be one of the leading assets in this year. And I think in the next year it will do very well, actually. So I think the next couple of years gold will outperform. We will see new all-time highs. We will rise higher, and gold will have its perfect run, actually.
Interesting. Like lots of stuff is happening in the background on gold as well, and Russia comes to mind. I just read the news. I just opened it here. It's 8 a.m. in Vancouver as we're recording this, and just open up like. It seems like Russia is defaulting already on some debt repayments and some interest payments. Do you see that weighing or like adding to the fuel to the fire for the gold price as well? And of course, there's rumors of Russia backing the ruble now with gold, or planning to back the ruble with gold. Like, what's your sense there?
I think they're not defaulting, actually. That's what the Western world says. If you look ruble against the dollar, it's on an all-time high, actually. It's doing better than ever. If you look at the economy, it's pretty strong, actually. They have record income with their sales in oil or gas. They never sold more oil, gas, or commodities to India, to China, to Saudi Arabia, or to Brazil than ever before. So they have a record year, actually. So I think they're really happy with their deals they're doing right now. And remember, I think over 100 countries in the world are not doing any sanctions against Russia. They're doing business with them. They deal with them. They buy their commodities. So actually, Russia is doing pretty well. I don't think they default. They default perhaps on paper, but they're not defaulting with their economy. It's the opposite, actually. They have really low debt level, and they have a lot of gold. They have a lot of commodities, and they look like they're winning the war in the Ukraine. So we will see how this will end. But I think globalization will be over, though. So we will never go back to pre-COVID or pre-Ukraine war. So the next couple of years will be definitely volatile and very exciting.
One thing that I find amazing and interesting, actually, is when you zoom out a little bit and you look at the sort of currency wars as well. I find that aspect really interesting because the mainstream media is not really reporting on that. It's sort of the ruble and the yuan versus the US dollar. How do you see that playing out? Because I think that, like, coming back to commodities, that plays a huge role on gold, for example.
Mm. So I think we right now see actually the end game of our fiat currency system. We see that, for example, countries like Saudi Arabia doing deals with other countries in euro for oil or gas. We see that China and Russia doing their deals in yuan or in renminbi or in ruble. So we see already that the world currency, the world reserve currency, US dollar, is not in favor anymore. We see it declining, actually, and I think we see the end of the US dollar as a world reserve currency. It will take a couple of months or years, but we definitely see the decline right now. And this is why the US is alarmed, and because this country or the US will want to keep the world reserve currency status, because it's like power, it's like a magic weapon. But they used this weapon right now with the sanctions against Russia, and you have one bullet if you use money as a weapon, and they tried it, and I think it failed somehow. And right now we see that other countries prepare themselves for sanctions perhaps in the future, like China, for example. So they will be better prepared than perhaps Russia if there will be sanctions, if they, for example, invade Taiwan. And of course, if we see a declining dollar, this will be good for gold, for example. And I think gold will have a great future in the next couple of years. You have to be in gold. It will protect your purchasing power against all fiat currencies. And I'm not in favor of any fiat currency. You need real money, and real money is definitely gold. And you need real assets actually in the near future to protect your purchasing power, to protect your wealth.
Yeah, I have to ask. I'm definitely not a specialist on that topic. And you have it hanging behind you. Is the declaration for Bitcoin? Bitcoin. It's the white paper behind you there,
Great Britain.
Right? So, but Bitcoin. I'm not an expert on that, but I'm really curious. Like, how does the digital currencies, and especially independent digital currencies, sort of factor in the whole equation now, as well, like with wealth security as well?
Mm. So Bitcoin is called very often like digital gold, like the little brother of gold. And I'm a big fan actually of sound money, like money without a third party, without risk losing everything. And this is gold, for example, for 5,000 years right now. And I think it's Bitcoin. And Bitcoin is very dependent on the money flow, on how much money the Federal Reserve or the ECB prints. So you see it's correlating with the NASDAQ. It's correlating with risky assets. So it's a risk on asset. And as soon as risk off is on the table, Bitcoin is crashing. People sell Bitcoin to liquidate it and to have cash. And right now, cash is king because everybody's expecting a recession. So that's why Bitcoin is doing not that well. But still, on the long term, if you zoom out, Bitcoin is doing very well. And I think Bitcoin has a great future. Actually, I bought Bitcoin last week because I think between 10 and 20,000 grand, Bitcoin is definitely in the buying zone. And on the long term, for the next 2, 3, 4, 5 years, right now, Bitcoin is super cheap. And if it dips lower again to retest the low in the 1700, then you should buy it again. So I'm waiting, and I think it will have a great future. And you need one decentralized, limited digital asset like Bitcoin, which is not controlled by a not elected Federal Reserve or ECB, and which you can move all over the world without a bank. So it's just great, and I can just advise every viewer here on the channel to invest like 1% of his whole net worth in Bitcoin, or perhaps just $500 to be part of it for this revolution, I think.
Interesting. You took my question away. I was going to ask you, like, how much of your portfolio is allocated in, let's call them cryptocurrencies, not just Bitcoin. Are there any alternatives as well that you recommend?
No.
Okay.
I can't recommend. If you want to gamble, yes, you can buy some other altcoins. Like the Bitcoin maximalists call them altcoins, all shit coins. And there's just one decentralized alternative, and this is Bitcoin actually. And I would focus on Bitcoin definitely. And it depends. You can invest 1% of your net worth. You can invest 5%. It depends how much you like Bitcoin, how much you understand it. But I think it's one of the greatest investment opportunities in this decade. It was already the best performing asset in the last decade, and I think it will have a great future in this decade as well, because the central banks need to print more money. We see this in the end game. At the end of the cycle, they always print money like crazy. We see high inflation, so everything speaks for limited assets like gold, like Bitcoin, or other commodities.
So you in your presentation, you talked about the digital euro and US dollars, like the CBDCs, the central bank digital currencies. How does that factor in your Bitcoin buying decision, but also gold? Because that's going to be massive competition. I think we're trending that way, that we'll see a digital euro, a digital US dollar. So obviously you don't want competition from altcoins or Bitcoins competing with those digital currencies. What's your perspective on that?
I definitely think that we will see CBDCs, central bank digital currencies, from the FED, from the ECB, from all other central banks, because they try desperately to protect their status, to print money, to protect their currencies, but they will fail, definitely. And if we have digital currencies, everybody has to realize, then you are in a digital dictatorship, because you can't escape the system. Because if you're in the system, you can't withdraw it like a bill or something and hide it under your pillow or something. Yeah, it's impossible. They will control every step, every single payment you do. They will know. And in a world of digitalization, it's just easy and it's perfect. So they can control every step. They can control taxes. They can freeze your account. Even look at Canada, what happened during the protests against the vaccination and everything. Yeah, people got shut out of their bank. Their PayPal accounts got freezed up and everything. So this is not a future I like. So we need alternative monetary systems. We need perhaps gold. We need definitely commodities. We need Bitcoin as an alternative. So I expect that we will see in the near future central bank digital currencies, and they're not for our good. That we all have to remind ourselves. So we need free money actually, and they're desperate. So that's why they try to put more repression on us.
Yeah, it's like I have your presentation open here from Deutsche Goldmesse that you gave about 3 weeks ago, and we will link to it down below to the presentation. It's on YouTube already. But if I read through this, I'm very close to jumping out of a window. Okay, digital euro and dollar, more socialism, higher taxes, recession, stagflation, inflation, deflation, hyperinflation, the end of the euro, end of fiat, extreme volatility, dark decade, wars and social unrest. Where's the positivity, Mark? What can we do? Mention something positive. What is happening right now that's actually a bit positive that it should make us hopeful for the future? Oh, come on, there's got to be something.
Yeah, sure. Those are all predictions I already made in my book 1 year ago, and a lot of these predictions came true already. So we all have to remember, crises are very important for the development, for progress in human history. So it's a part of the evolution, and humankind need crises, need crashes actually to learn. That's when did you learn the most in your life? When you had a crash, when you failed actually, and that's part of the human evolution since the beginning of human life. So anyhow, with this crash, with this decade, life won't be over. The world won't go down or something. It's going on. You have to think positive. And remember, 100 years ago, we had Weimar Republic, we had hyperinflation, we had the First World War, we had the Second World War, and life went on. Look at Germany in the 45 last century. We lost the war, everything was destroyed, millions of people died, but hey, we had the biggest surge actually in wealth in history. Germany used to be number one actually. We built the most respected cars and machines and engineers here in this country, which are have a good reputation. Everything was great. So after every rainy day comes a sunny day. Just think positive. And I think we will have a golden era actually after this crisis, after this time, because I expect actually that with the end of the fiat currency system, we will implement a better system, a better monetary system, which will actually help humankind for centuries and not only for a couple of years. So we will see what happens, but I think we are right now witnessing history. We will see the end of the fiat currency system, and this system is not fair. It's perverted actually, because a small fraction of the society getting richer and richer, and most people getting poorer and poorer, and that's not fair.
Sort of as a logical consequence, of course, to protect your wealth and to get through this, let's call it the storm, real assets obviously should be considered safe haven, right? What do you advise your clients right now? How much of their assets should be in real assets, meaning gold, commodities, housing or houses, real estate? What else factors in there, and how much do you advise them to be positioned like that? Should they be all cash? Should they be, or how much should be cash? Really curious.
Yeah. Yeah, right now, actually, it's a fact. I recommended cash, to hold cash, because cash is king. If you expect a recession, if you expect a deflation or deflationary shock, cash is king. Then everything sells, and everything got sold, like gold or diamonds or whatever, stocks, everything. So cash is king. And if you look at the US dollar, it was a good advice in the last couple of months, actually, because everything got cheaper. The stock market plunged, gold is doing okay, Bitcoin plunged, and you can now buy more Bitcoin than 3 or 6 months ago. So yeah, actually I would definitely own 20 to 30% in precious metals, gold and silver. And then I definitely recommend a share of Bitcoin, diamonds, real assets, perhaps real estate, but not buying right now in Germany or in Vancouver. Wait till the prices go low, and they will go lower. The bubble is bursting one day, don't worry. And then I would definitely invest in stocks, and I think pretty soon we will have opportunities again, buying commodity stocks all over the place for the long run. And I think commodity stocks is the place to peak, because I think the commodity super cycle just started in 2020 and will not end in 2022. I think we're very early, and a few people only notice that.
Interesting. Quick question. I want to talk more commodities in a second, but just when you mentioned it, a question popped to mind, and it's sort of where do you see the inflection point between inflation? Because you say, okay, we're going all cash, and falling housing prices and stuff. You said, oh, don't buy in Vancouver, don't buy in Germany. But how long should you wait? Where's that inflection point? Whereas inflation eats up your cash versus, okay, falling house price. We got to wait a little longer. Let's wait another month for falling house prices. Do you know what I mean? What I'm getting at?
Yeah, Sure, sure. But you see, for example, right now you lose like 8.6% purchasing power with the US dollar in 1 year. The stock market plunged like 20%. So it was better having US dollars instead of having like stocks, for example. Yeah, and even tech stocks even plunged 50 to 70 to 80%. And the same with Bitcoin. Bitcoin went down from the all-time high 75%. So it was better having cash, US dollar, or whatever. So I think to the perfect timing is impossible. You have to scale in, you have to buy in tranches. So there will be a time frame where you start buying like stocks or gold or silver or Bitcoin, and then you just do it another time. Every time it comes down, you buy even more. So you do dollar cost averaging. That's it, easy. So what was the question again?
No, just the inflection point of inflation versus like falling house prices. Like, where do you see that happening? Like, how long should one wait before your cash becomes worthless versus investing in real assets, right? So
yeah, good question. I wouldn't hold more than 30% in cash of my net worth. It is always like Warren Buffett said, never invest more than 30% of your net worth in one asset, and you have a big risk. So 20 to 30% cash is right now perfect. And then if there are opportunities, if the market is correcting even more, if there's a crash in real estate, you just buy something or you scale in. So that's what I would do actually. And I think the opportunities are not too far away. I expect a bear market rally in the summer. And then if the recession hits the market, then we will see lower stock market prices. And then you can buy some commodity stocks or even real estate. But for example, if you look at the copper price, the copper price is Dr. Copper is the leading indicator actually for the cycle. And right now, I think copper is in a bear market, and this is actually the perfect indicator for a recession. So everybody's expecting a recession. So this time, I think it will come, and it will be perhaps even a depression if the Fed keeps on hiking rates in a recession. It will be a really nice experiment, and then I think we will have a very volatile autumn and winter time.
Yeah, interesting.
Coming.
Yeah, oh, absolutely. Definitely talking energy crisis. That's a whole different conversation that we'll need to get you back on the program for that.
Yes.
You mentioned the Fed. Like, that's another discussion topic as well. Like, we could spend hours on. You mentioned copper as well. I want to touch on the Fed real quick. Do you see there in Germany, like at the Deutsche Goldmesse, I think it was one of our keynotes mentioned like, he sees a 2% ceiling on the interest rates.
It was me.
Was it you?
Me, actually.
Okay.
Yeah, it was me.
Perfect. So I think it was somebody else as well. I've heard quite a few interviews where the experts say like, well, the Fed can't rake past 2%. So is that still the case? Like, it looks like they're going to plow right through it with the next with their next session.
I just look at the history, and since 25 years, every rate cycle was lower than the cycle before. And if you look back in 2000, we had 6.25%. And then in 2008, we had like 5.25%. And 2018, we had like 2.25%. And right now we're at around, I think it's 1.5% right now. So they never went higher than the cycle before. And if they would do, then they would have a real problem, because look at the debts in the US. It's 30 trillion national debt. We have 90 trillion at all with the companies and the private households. So actually we have so many zombie companies in the US right now. They would just go bankrupt. So I don't know if the Fed is taking the risk and putting like 10, 20, 50,000 companies in insolvency, in bankruptcy. So they have to decide actually between fighting the inflation or hyperinflation. That's the only goal they have. The same with the ECB. So it's not a great stand they have. It's not a great choice they have. It's a choice between two different diseases, and all will definitely kill the patient. So that's where they are.
Yeah. Good point, and we'll see how fast it goes, because the market have reacted very negatively to the first rate hikes. Gold actually, and the junior miners and the financing space has completely dried off ever since March 16th, the first rate hike as well. So, but I want to circle back. I'll use the last few minutes to actually talk about the commodity super cycle. You mentioned Dr. Copper. It seems like cooling off. Like copper touched $5 a pound. I'm not sure what that is in tons exactly, but we're now closer to 360 right now a pound. It's been dropping quite rapidly. How does that factor in? Like you said, it's a foreshadowing of a recession. Yes. It's cooling off. But how does that fit in with the whole ESG narrative, electrification of everybody's fleet? Like, how does that fit together?
Not at all. But right now we have a cooling economy. We have lockdowns in China. 270 million people are in lockdown. We have the zero COVID policy of the Communist Party in China. We see definitely a recession in Europe and in Germany. So definitely the economy, the world economy is cooling down. So we don't have the rates right now we had like 2 or 3 years ago. And a cooling economy means we need less commodities, less copper. And copper is the most important commodity we have. We need it in every product, in the iPhone, in the Tesla, everywhere. You need copper. So this is the leading indicator actually. But you're definitely right. And this is my bull case actually for the commodity super cycle, because the governments all over the world pushing for ESG. If it makes sense or not, this is a totally different topic. Yeah, I don't think it makes sense, but they're pushing it and they put so many tax money in it. So there will be billion or trillion of euros and dollars into renewable energies and everything else. So we see this green transformation, which they push because it's on their agenda. And of course, will I buy Tesla or solar companies? No, I want to invest into the foundation of this revolution, and that's definitely the commodities. You need nickel, you need cobalt, you need copper, you need all this raw earths and metals and energy. You need a lot of energy. It's why I like coal, gas, uranium. And here goes ESG. That's very interesting. Will be a nice investment case actually. And yeah, I think you should definitely have your stakes into commodities in mining companies in the next couple of years, because I think they will outperform everything, because all the taxpayers' money is going into the ESG revolution by the politicians.
Yeah, I was listening to an interview this morning on the way to work and into the office here, and somebody called them the new FANG stocks. Fuel, agriculture, I forgot what the N stands for. I need to look that up. But gold is the last one, obviously. There's 2 A's in there. It's like really interesting that's being replaced, and that's where the money should be flowing, right? Mark, to sort of sum this up, do you have a favorite commodity right now? If you had to pick one, which one?
For which time frame?
Let's say next 12 months.
This is hard, but I think energy stocks actually, oil, gas, and coal. I think and uranium, they will do pretty well actually. But it's I know, but it's energy.
Energy.
So it will be volatile. I think we go down before we go up. The same with the crisis. I think it will get worse before it gets better. But on the long term, if you run for a marathon, you need all these energy stocks: coal, gas, LNG gas, uranium, and oil, of course, and that will do spectacular. I know it. It will be a great ride.
Okay. Final question, Mark. Summer is upon us, and schools are just getting out. What does the next 2 months look like in the markets? And do you think there's going to be a major change in the fall? It feels like, based on conversations I have here in North America, that everybody's preparing, at least on the commodity side, for a rally in the fall. But what does that mean on the flip side? Like, what are we going to see this summer? And what are the main markets going to do based on your prediction?
Okay, I think we're seeing next couple of weeks a relief rally, little one on the stock markets. We will see then a correction in fall and winter, and I think it will be. There's a big possibility that we see a major crash this year. And I heard Michael Burry a couple of days ago in an interview. Somebody was citing his tweets, and he is expecting the same. And he's always actually pretty good with his predictions. But I think for the summer it will be okay. And then in the summer there will be also already the first correction. And then in later this year we will see perhaps a major crash, but definitely another correction in the market. for commodities, I'm actually pretty positive. So I expect that gold is doing well. Mining stocks will do better than the major markets. So, but I'm a long-term investor, and that's why I look actually on 3 to 5 years. And on this time frame, it's just perfect buying right now. Commodities, mining stocks, and so on, they will do just great in the next couple of years.
Fantastic. Marc, we're going to end it here. Thank you so much. Vielen Dank. Und ich möchte natürlich allen Zuhörern auch vielen Dank aussprechen. Thank you so much for tuning in. Don't forget to subscribe, hit that like button, and go watch the video of Marc's presentation from the Deutsche Goldmesse down below. Thank you so much.
You're welcome.